I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the Pink, symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
I'm talking with Ted Dixon. He's the CEO and co-founder of IncResearch.ca, Canada's first online financial news and research service, providing insider news and knowledge to investors. Happy New Year, Ted, and welcome back to the show.
Well, Happy New Year, Jim, and Happy New Year's to all your listeners.
The little old Toronto Venture Exchange, I don't think gets a lot of attention or the attention it deserves. What's your feeling on that?
Well, amazingly, we just kind of took a look at some of the more, I think, standout trends for the year coming up, and we seem to think that the venture exchange and junior companies in particular could be a good year for them, 2018. You know, we heard a lot at the end of 2017 about, the TSX Composite had such a poor performance compared to everyone else in the world, and those Canadian stocks, they just can't perform like the rest of the world. Well, no one was talking about junior stocks, and the Venture Index, calculated by S&P TSX, Jim, is up 66% over the last 2 years, and that's even better than the NASDAQ 100 with its FANG stock participation. So there's been a stealth rally in the junior Canadian space that no one's been talking about. And when no one's been talking about it and it's gone up that much, it leads us to believe that more and more people will start talking about it, and there's probably going to be more room on the upside in 2018.
What's been driving the venture exchange?
Well, they certainly benefited from marijuana stocks and blockchain stocks, but a lot of that advance took place in the last week of in December, and we wrote about this in our Top 40 report that we just released today for our clients and Canadian Insider Club members. And the title of the January report is "Don't Look Down," because we've come up so far so fast. And the fact of the matter is, a lot of the gains that the venture has experienced over those 2 years have just happened, and that's been helped by marijuana stocks, but also junior mining. Gold stocks have bounced off some of their lows here, and we've had, of course, already good moves in lithium stocks, but junior gold and junior base metal stocks are also showing signs of life. So, look, the Canadian junior area is probably a pretty good place to be for those who have the risk tolerances for it. You know, if you've been betting on FANG stocks in the U.S., which, but no one seems to think there's any risk with FANG stocks, but there's plenty of risk. Just with the way central banks have manipulated markets, they've taken the risk, those risk premiums out. But there's plenty of risk with FANG stocks, and just as there's plenty of risk with Canadian juniors. But going forward, we think that the Canadian juniors among speculators will start to get more attention than they've certainly received in the past little while.
Has foreign money been one of the reasons why the venture exchange has done so well?
Foreign money? I think it's probably a lot is probably domestically driven. I mean, I don't have the numbers on that, but I just don't know. There hasn't been a lot of attention given to this market in such a long time, and it's not just the venture. I should point out that there's also the Canadian Securities Exchange, which is kind of a competitor to the venture exchange now, and they've got a lot of marijuana and cryptocurrency stocks and mining stocks. So that exchange is also benefiting from it. But I could be wrong, but I just don't think that that's on the radar screen of a lot of investors around the world. I think there's been there's some true believers that have hung on in Canada. A lot of your listeners, who've never left the venture exchange, they They certainly know what's going on. But there's also been, I think, a new breed of domestic investors in blockchain and marijuana stocks that are, maybe a little younger in terms of, compared to myself and maybe some others who've been in the venture market for a while. So I think it's attracted some new money, but I'd be surprised if a lot of it's foreign at this point.
Do you think the marijuana space is overbought, or is there still lots of room?
I think the marijuana space is now pretty much in a speculative bubble. That's just happened though. Like we've always been a little cautious about the space in relation to interest rates, but interest rates have stayed low, so that's given justification for a lot of these companies to move up. And the true leader, like the true leaders, I'm not going to mention any names in this, but we've talked about them in our reports to clients. Are going to benefit from the legalized environment that's coming up. There's no doubt about it. Now, whether the current valuations of those stocks are justified, well, we're starting to see quite a bit of insider selling. People can go to CanadianInsider.com and look at Money is Moving and feature, and they can see who's selling. There's, and the CEO of one of the largest marijuana companies just sold a big bunch of, fair amount of stock. It wasn't super huge, but I think it's basically a signal to the market, and is saying, look, these are good levels to be selling here. Look, that's not to say it can't keep going up further and further and further in a bout of irrational exuberance. Sure, but then you have to understand that's what you're playing. You're playing the kind of the Bitcoin hot potato play, where you're going to have to be prepared to move pretty quickly when sentiment changes, and it can change on the dime. So yes, there's these companies, some of these major companies have great futures ahead, but whether their stock prices do at these current valuation levels, I think it's probably a better time to start moving money out of pot into junior mining, if you're a speculator. And, you're going to have to be very nimble, I think, because I think money's going to start to flow around pretty quickly in 2018. And, but I think in general, junior Canadian stocks are going to be a great place, for speculators to make money, in the new year.
We'll have more with Ted Dixon right after the break.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
Welcome back. We're speaking with Ted Dixon. Some people are speculating that, of course, because the stock markets have been going up over the last 9 years, we must be due for a major correction. Others are saying, we think that you'll be buying the dips all year and it's going to do nothing but climb.
Well, let's just first look at the Venture Exchange and that in relation to that question, because it's an important question. It's gone up 66% in the last 2 years. Isn't it due for a pullback? Well, probably a pullback. The question is how much and how far. When you look on a short-term basis, it is overbought on a short-term basis. But we went back and we looked at the last 5 years. And when you look at the last 5 years, it's a different story. You got a completely different story in the last 5 years. And what appears to be happening is that, and we wrote about this in our top 40 report, which is available on Canadian Insider. HomeStreet.com for our Canadian Club members is Canadian Insider Club members. The 5-year return on the venture exchange, I'm just looking this up right now because it's been moving around so much, is still in negative territory. Okay, so we've had a big move in 2 years. When you look at the chart, what could be very much happening here is a reverse head and shoulders. So you had the venture exchange index dip down below the 500 level way back towards the end of 2016, end of 2015, early 2016, and it's been climbing back kind of in fits and starts. So what happened on the way down, Jim? You had a lot of oversold conditions, but they persisted for a long time. So on the way back up, you could easily have periods where you have prolonged overbought periods. And we kind of seen that already, and we expect you're going to see more. So we think there is more room to run on the venture exchange, significantly more room to run. Insiders, are positioned that way in general. We think there's, as we mentioned before the break, there's going to be some shifting between different groups, from pot, maybe to blockchain to junior mining, so you're going to have to pay attention. This isn't a buy and hold environment by any stretch of the imagination. It's a buy and watch, watch and move. So there's going to be a lot of activity, I think, in the venture market, and pullbacks, unless we see a major increase in interest rates, pullbacks will probably be buying opportunities. And I know a lot of people are probably sick of hearing that, but this is pretty much a new phenomenon in Canada. That's a trade that's worked in the United States since the end of the financial crisis, more or less. I think we're in the late innings of this huge bull market we've had globally since the financial crisis, and Canada typically tends to benefit a lot in those late innings. And I think that's where we're at. How long it's going to last, of course, is the multi-billion-dollar question. But I think we're kind of in the home stretch here of this bull market, and Canada is definitely a place you want to be. And don't listen to all the perma bears, all the naysayers who have been down on Canada for the last few years. But they may have been right 3 or 4 years ago, but block that out. Look forward, and now think about where we are in the market cycle, and we're coming towards the home stretch, and Canada is going to offer a lot of places, to speculate and take advantage of, what I think will probably be the last sprint across the finish line for this bull market here.
Well, Ted, you proudly predicted that Canada's economy would do very well in 2017. The federal government naysayed the Canadian economy until about the last third of the year, and then they finally admitted, Canada's doing pretty well. Again, you're very positive about the economy. Is Ottawa throwing any cold water on it again?
Well, I'm a bit more positive on the stock market than the economy. I think the Canadian economy is going to do fine. As we've talked, a theme we've talked about a lot. I don't see insiders freaking out about NAFTA. I don't see them freaking out about the tax situation. Sure, there's room for improvement in Ottawa. We could have a whole call on that. I think the Trudeau government's making some mistakes here. The Ontario government, mistakes are their specialty when it comes to the economy. It's just surprising to see that Ontario's surviving as well as it has, despite all the bad policy moves out of Queen's Park. That's a testament to the the work ethic and the intelligence and the nose to the grindstone behavior and attitudes of people who live in Ontario. It has nothing to do with the government. The government is economy's worst enemy in Ontario, but that's another story. In general, the Canadian economy should do pretty good. May not be as good as 2017, but it's the market that you really want to focus on, the stock market in Canada and the opportunities within it.
We'll have more with Ted Dixon right after this.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Ted Dixon. Well, Ted, let's talk a bit about taxes. Is Canada still competitive with the U.S.?
This is something we wrote all about in our market report a little bit as well to start the year out. I think it's too early to worry too much about Canada losing competitiveness in relation to the Trump tax cuts, and here's why. The Trump tax cuts have been financed by debt, okay? They've gone on a borrowing binge to pay for these tax cuts. I always hear, and it never ceases to amaze me. I keep hearing people complain about, the Ottawa's racking up the debt in Canada. Oh, the debt's getting so high. But, if only we could be like the U.S. Well, I'm sorry, the U.S., they're going on a massive borrowing binge that makes Canada look prudent in comparison. Okay, so why is that relevant to our competitiveness? Well, when you do something based off of debt, when you're a sovereign nation, at some point the bond market takes notice, and you're starting to see U.S. interest rates move up. What's that going to mean, Jim? It means that U.S. companies who are borrowing will have to pay more likely than Canadian companies. So their cost of capital is going to go up. And Canadian cost of capital relatively is probably going to go down to the U.S. So while the tax situation has improved for U.S. companies, now they're actually competitive with Canadian companies, where before they were, generally speaking, less competitive. So now they're competitive on the tax front. In some cases, they'll be more competitive. In other cases, not so much. But their cost of capital may be going up. So we'll have to see how this plays out. So it's way too early to start freaking out about how the Trump tax cuts are going to make us uncompetitive. There's two sides to that, the Trump tax cut equation. Yes, it's easy to spend the money, and yes, it's easy to give out the tax cuts, but financing it, that's the hard part, and how that's going to impact the U.S. economy, we'll have to see how that plays out.
And also a factor for Canadians, health care, either in BC, it's now a more affordable medical care premium. In other provinces, they don't pay one at all. In the U.S., employers pay the health bill of their employees for the most part, or people have to pay it on themselves, and that cost is huge. Does that change the regime if you consider that semi kind of tax or levy?
Well, and we don't know how the Trump tax changes are going to impact the U.S. healthcare system. They have made some changes to the healthcare regime. Now, I believe individuals will no longer be forced to participate. Well, that's going to impact premiums for those who are. And we'll see how that plays out, because that could be another cost that goes up. So there's a lot of moving parts in those tax cuts. Yes, it's a boost to the U.S. economy. It's being paid for by future generations. Let's not kid ourselves. And that's going to show up in interest rates, and that's showing up in the U.S. dollar. The U.S. dollar is weakening. And, in 20 years ago, you would say, oh, that's terrible. Now U.S. exporters are going to be more competitive. Our Canadian exporters, this is the Stephen Polo's thing. Oh, we need a low dollar, otherwise we're not going to be able to compete. It's the crybaby approach to, currency management. It's like, oh, we need a low dollar or we won't be able to compete. Well, the world is much more complicated. It's a world where artificial intelligence is emerging. It's an economy, global economy, where you need smart, well-equipped workforces. You don't need a low dollar. We're not competing with Vietnam. We're not competing with Bangladesh. We're not in terms of making, sports shirts and T-shirts. That's not what's going to drive our economy, Jim. It's going to drive our economy whether we can compete in very complicated industries like aerospace parts, not just Bombardier. There's a ton of other companies that do other things in the aerospace industry. And, we got to compete on artificial intelligence and software programming. All of these have nothing to do with the Stephen Polo's low dollar mantra that we need a low dollar to make our companies more competitive. The Bank of Canada is so out to lunch in its mercantilist approach. The fact that the Canadian dollar is rising back towards what I would call nearly fair value, and I would suspect that's probably around 85 cents. is a good thing for Canada, and the fact that the U.S. dollar is weakening, it's an old economy solution to a new economy problem, and it's not going to work.
It doesn't look like Trump's going to turn away from his protectionist attitude. What does that mean for the NAFTA talks, which were supposed to be concluded before Christmas?
Well, it's a big wild card. If they do fail, it will have implications. It will have an impact on the market initially in Canada. Auto parts companies and the like, manufacturing companies will probably, have a knee-jerk move down. We'll have to see how it all plays out. And we will see. I mean, it is a risk, but all I can say at this point is Canadian insiders are not freaking out over it. They're not selling. Look, we just saw the CEO of Linamar, and this is on CanadianInsider.com, and Linamar is in the Canadian Insider Index. She bought more shares after they announced a new takeover deal of another Canadian company late last year. So she's going to bat and working for putting her money where her mouth is. And that's the type of leadership we have that we can find in Canada, and that's why, I'm pretty upbeat about the medium-term prospects for the Canadian economy. It's because of the people, and in terms of any policy problems that are coming out of Ottawa, look, these are nothing compared to what's going on in the United States. They've made a nice move here in the U.S. on deregulation. That was good. We could use much more of that in Canada. But this whole tax cut gamble, and I think it's a big gamble. We'll see how that plays out. And Canada's I think sitting in a pretty decent place. But NAFTA, look, that's a huge wild card. And the last thing we need is that to be ripped up. But if it's ripped up, we'll deal with it at the time, and we'll just have to see how it plays out. I mean, the U.S. has a lot at stake if it rips up NAFTA as well. So, that's fairly well understood. So yeah, we'll have to see. It's probably the biggest risk facing Canadian stocks and the Canadian economy this year. That's for sure.
Ted, thank you so much for chatting with us.
Well, thanks very much, Jim.
My guest has been Ted Dixon, CEO and co-founder of IncResearch.ca. You're listening to HowStreet.com radio. Find us on Twitter @HowStreet. Our popular YouTube channel is Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.